Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastop Jr.
Welcome back to the Ask Ralph Show. Today we're going to talk about what happens when you get that dreaded IRS notice. And I've handled the functions of these IRS notices, but specifically right now what I want to talk about is when you've been selected for audit. Let's start with some statistics. Each year, 1 in 160 individual taxpayers are audited. So 1 in 160. Now, of course, this goes up as the income level increases. In fact, 1 in 50 tax returns reporting gross income above $500,000 or $500,000 are audited. And then it even drops more to 1 in 12 of those people reporting more than $5 million in gross income. So the answer here is don't make a lot of money, folks, and you won't have to worry about getting audited. Just kidding. But it's true because the IRS is sensible in knowing that if they go after people with more income, they're going to find bigger fish, or they're going to find more money to collect. So let's talk about how this all starts. Now, generally, this is started when the IRS sends you a notice saying that they believe that a taxpayer has failed to report items of income, the return had large or unusual or questionable deductions, or the taxpayer has taken an aggressive position. Now, all of this is based on some data analytics. The fancy term for that is the DIF, or the Discriminant Index Function. This has been used by the IRS since 1969. It's basically an algorithm that puts all of your information into its database and kicks out things. So, for example, let's say you're a married filing joint couple and your income between the two of you is $60,000. Then they flip over to your Schedule A and they say, oh, okay, well, that's good. But then you gave $30,000 to charity. Well, red flag, boom, boom, boom. At 50% of your income, where'd that money come from? How are you paying your bills? First thing is, when you get this notice, I'm going to say this several times today when I talk about this, is you need to get professional help. Never represent yourself. The IRS, and I'm not bad-mouthing the IRS because they have a place, they have a thing to do, they have a job to do to make sure that people are paying their fair share. But they are professionals at collecting tax. You need representation. So the way this works is the IRS is going to notify you of an audit. And there's really basically 3 ways that this happens. It comes in a letter called an IDR, which is a information document request. The first thing they're going to ask you about is a copy of your personal and business bank statements if it's a business audit, which brings me to this whole discussion. I say this to clients all the time, and it's a discussion of commingling. And what I mean by that is, if you have a business, your best strategy is to use the business account for business expenses and your personal account for personal expenses. It is much easier in an audit to represent a taxpayer when I can say to the auditor, listen, Sally has a business. She uses her business account for business transactions. She has a personal account for personal transactions. My experience has been the IRS is still going to look at both, but they're not going to be looking at much more questions. The other side is that, so let's say you just have one account. Then the auditor says, okay, Ralph, I'm representing this taxpayer. How do I know that this charge for Staples, the store Staples, is a business expense and not personal? Because I see a charge here for Acme. Well, that's personal. They bought coffee. Okay, well, how do I know that wasn't business? Vice versa. So this audit letter is going to provide an indication of what type of audit we're talking about. And there's really 3 types. There's a correspondence audit. That's the least intrusive one. This is really one where, hey, we noticed something weird. Can you send us some information? The next one is an office audit. This is a little less complex tax returns. This is during a scheduled appointment. The IRS is going to call you in to talk about some things. And then the final one is a field audit. Beware of the field audits, man. That's not good, because it typically involves the agent's request for an in-person interview and a tour of the business. And my understanding is most of the IRS agents now require that. And once you get started in this, they're going to ask for additional documents. This IDR is going to be the map for this. It's going to provide you with response dates. They're going to tell you when they need to get this response back. Agents will give you about 15 days, but you need to ask for more time if you need it, but be prepared to give them a reason for that. The bottom line is that the IRS agent is going to take the position of once you filed a tax return, you should have already assembled your information. You should just be ready to go with that. So be prepared. If you're going to put a tax return in, you should already have your information in line and ready, because that's what the IRS is going to expect. The final part of this is the IRS audit report, which is the IRS Form 4549, or the Revenue Agent Report, or RAR. It's the explanation of any proposed changes, and its bottom line will indicate the additional tax due, if any. Now, hopefully you'll get one of these, and it'll say, after our examination or audit, there's no changes. Not generally been my experience. Now, first of all, when you get, this audit, remember what I said a little bit a while ago. Under the Taxpayer's Bill of Rights, a taxpayer who has retained an authorized representative cannot be made to attend an interview with the IRS and agent unless a summons is issued. And that's a tactic the IRS doesn't employ in most audits. Nevertheless, you are likely to be asked by the IRS agent if he or she can interview you and tour your business if it's a business return. What you want to do there is make sure, first of all, you have representation, but you want to keep that interview short and the business tour brief. And here's a big thing. Don't allow the IRS agent to perform their work at your office. You don't want to give them unfettered access. So once they've issued this report, if you disagree with the findings, you've still got options. You get this Taxpayer Bill of Rights. You have 4 basic avenues to dispute the matter. The first one being a conference with the agent's manager. So you get to talk to the agent who met with you, talk to their manager and say, hey, can we do something about this? This works best in situations where the agent is being unreasonable about tax issues relating to the adequacy of the taxpayer's documentation. Maybe the IRS agent having a bad day, but you feel like, hey, these documents really represent what we're talking about here. Then we get into talking about appeals. So if that doesn't work, you get into appeals. The first one is a recent program called the Fast Track Settlement Process. That's where the IRS assigns the case to an appeals officer, meets with you, the IRS agent and his or her manager, to try to mediate a resolution, generally over in a couple hours. Now, if we can't reach an agreement during the fast track, you still have the right to file a formal protest. But remember, these formal protests right now, on average, are taking 8 months before an appeals officer conducts the first hearing. So this fast track cuts that time in half. Now, of course, if that doesn't work, you finally have the right to dispute this in court, or what they call U.S. tax court. Here's the thing you need to remember. You only have 90 days to respond to the IRS notice of deficiency. So once they issue that deficiency notice, they've already concluded their audit. Failure to file a petition with the courts, typically tax court, within 90-day window allows the IRS to finalize its case and assess the tax. So timers start running. You need to pay attention to this. So I highly recommend you hire somebody to represent you, an enrolled agent, an accountant, an attorney in some cases, depending upon what we're talking about. But just be aware of this. Knowledge is the best thing. And if you get an opportunity, go on the IRS website and read the Taxpayer's Bill of Rights. So I hope this was helpful if you get that dreaded audit notice.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.